Guys, it's Jenny with JennyProRealtor.com. I want to come to you and kind of talk today a little bit about what to expect in the housing market and basically what the economy is going to be doing for 2023. Right now, we're sitting in December. We're a couple weeks away from Christmas, so we're all getting excited for our parties, our Christmas pajamas, making sure we get the last run of Christmas presents and all the food that we're going to make. Lots of fun things happening. But a lot of us are kind of projecting towards what the next year is going to bring as well. So in this video, we're going to be talking about the forecast of the housing inventory, mortgage rates, housing prices, rental rates, and the market conditions. So make sure you stay tuned and listen up for this podcast right here, right now. All things real estate, where we dive into how to manage real estate processes, get tips on building an investment profile, create space for how to build a passive income, and most of all, how to navigate all things real estate. Here is your host, Jenny Pro Realtor, who went from being a single mom to building an empire with over $1 million in assets in real estate. She is our expert, a twin plus one mom, and relates to the average income holder to how to build their empire and grow wealth in real estate. So let's go ahead and jump into this. The housing market has definitely taken a different turn this year in 2022. We saw the peak of the prices in spring of 2022. Then the interest rate feds decided that we needed to come to a halt because of inflation. Pretty sure we're all aware of this and what's happening. So let's pay attention to this a little bit here. What is the average price in America that houses are going for? Now, in America overall, it's $413,000. But in Utah, we're still above the $500,000 range, which is still a good thing. We're holding strong with the prices here in Utah. We're still seeing jobs holding. We know that we're not done with this rocket ship that we're going to be blasting off of. So 2023 is going to be bringing some interesting things. But let's think about this. Why do people even need to move? People don't move just based on the fact that they can make a buck or two on their home. Now, a lot of realtors were pitching that, your house is worth a lot. You should probably move. It's a good time to be thinking about making a lot of equity in your home. But if you live in a home, you still have to have a place to live. So then people would have to sell and then buy in a market like that. And sellers didn't really seem to like that idea. In fact, enough that we had such a low inventory that sellers really didn't believe in that idea. Once the interest rates started to go up, it started to flatten the line of the competition. No more price above appraised value. No more multiple offers that are crazy, giving their first child away, including the dog in the house, not asking for inspections to be done. We had some crazy things happening in the last 2 years with the housing market. No longer did we saw those. It almost like we hit a break and things started to shift because interest rates were going up a lot. If you want to break down the difference that an interest rate makes, the difference between a 3% and a 7% interest rate in your monthly mortgage is literally almost $2,000 of a monthly mortgage. Now, we cannot support a market like that, which is why we continue to see prices come down and down and down. I listed a home in Lehi, which is a very hot city in Utah, and it was definitely a lot less than what it would have gone for back in January of 2022. But let me tell you the story and why it's so important to pay attention to this, because this was someone who was selling a home and then needed to buy a home, who was literally just moving a city over. They wanted to upgrade, wanted more space, which could be a lot of us in our situations. There's a lot of reasons why people are needing to move. For example, you have more children, you get relocated in your job. Let's say you have a trust and the family member passes away and you need to sell the home. Maybe you have a need for more space in your home just in general. There's a lot of reasons. People get married, people get divorced. There's a lot of reasons why people need to buy and sell houses. And so the market is going to continue to move forward. Now, there are a lot of realtors in the market. It's very overly saturated, and something that my uncle has always told me. He's the mayor of Highland and he's a very high commercial investor in real estate. He always said it's scary when your cash register employee at the store has a license in real estate. this is going to be a good opportunity to kind of feed through those realtors who didn't really see a passion in this job, but just saw it as a buck or two to make. Now is the time for realtors to really shine forth our efforts, what we can really do, and the value that we add to selling your home and helping you purchase a home. Bringing it back to this story that I'm going to be telling you. So, this client of mine, their neighbor's home appraised for in December of 2021, appraised for $600,000, which is very comparable to their house. So when I sat down with them in June, the story was starting to shift and we didn't really know what we were walking into. I told them they could sell their house around 540. Then things started getting worse. We saw interest rates go up more and more and more. We ended up selling their house for 485. So huge difference if you want to look at from December 600,000 to the current time right now, which is December of 2022 at 385,000. But a lot of us could look at that as like, well, why in the world would they even move? Well, let's break this down. We knew that because the interest rates were going up, that the buying of their home, it was going to be a sixes across the board. Look, if I can't sell my house for this much, I'm not going to buy a house for this much either. So yes, they lost. In your mind, they would say they lost, but they never had that equity either. It's money they've never had in their pocket. So they didn't really lose the equity. They just didn't have that equity to work with. But also they didn't have to worry about that equity being lost because the sellers on the buy side had to move their prices down as well. So it took a while for us to get some traction on this house, and we definitely decided to drop the price drastically. We got a great offer and we were able, and I'll tell you what's interesting with this is as a real estate agent, I found it to be more difficult to find a seller to work with the offers that we were giving other than trying to get offers on our property. Because as a real estate agent, I'm really studying the market. I'm really in there trying to figure out where's the price range, what's happening day by day, week by week. I know where your number's at. And so I knew where to price this home. So we could get offers on their house, but then we couldn't get offers accepted from the seller. So it's been a huge learning curve for sellers to realize that it's not equity that they've lost. It's equity that they just don't have in their pocket. But did they really need it? My clients ended up finding a beautiful home that they were so excited about, got it locked down, closed in less than 20 days, was able to move in, locked a rate in, got a great rate. We bought a rate with the concessions that we got from the seller, which is what we're seeing across the board, about $10,000, $20,000, $30,000 that buyers are asking from the sellers to pay down the interest rate. Now, basically what that looks like is you're just basically asking the seller to pay the difference of the interest rate that you have to pay for the home. So because I'm able to buy down an interest rate, I'm also able to offer the sellers more cash in their pocket because they give me more concessions to buy down. If you really want to break this down more, I could sit down with you and talk about what that actually means, because I would have an interest rate gives me more value in cash if I lower it, because my quality to be able to afford a higher house goes up, which is the exact reason why we saw the housing market go up in price, because interest rates kept coming down. No longer is it that you can afford a $600,000 house and walk into it and have a mortgage under $3,000 a month. If I went and bought a house for $600,000 in the mortgage interest rates today, which are in the mid six range, I would be looking around $4,800, maybe $5,000 a month, depending on how much money I put down on that house. Also depends on a lot of other factors with taxes, if there's an HOA, things like that as well. But I would love to sit down and kind of go over that with you, which why you can see the difference of having a $600,000 house and a 485 house that sold makes a huge difference. So moving forward, we are going to see the market conditions shift, and some are saying that we might even see a buyer's market come into play here in spring. But let me remind you what that even means. When I talk to potential buyers and maybe first home buyers, for some reason they have in their mind that there's going to be this market crash and they're going to get a great mortgage and opportunity to buy a house. It's not going to be that way, because why would it turn into a buyer's market? It will turn into a buyer's market because interest rates are so high and it's harder for buyers to qualify for it. Right now, you need a 42% debt to ratio income, which means you need to be having your income below 42% with all the debt. That means credit cards, cars, school payments, your mortgages has to be under that 42% in order to qualify. Well, if you have interest rates rising high and the prices and the sellers aren't moving, I can no longer afford the house that I want as a buyer, which is why we're seeing a lot of buyers sitting around. But why would it shift to a buyer's market? That's because it's going to be harder for buyers to jump into the market. But it's also a great opportunity if you can afford a house. And I would say a house that you can either view as an investment or a house that you're going to be able to love for at least 5 years. Because we are headed towards a recession. We already know that. The numbers are already there. I shouldn't say headed to recession. We actually are in a recession. And the housing market was the first thing to feel it. We're starting to see layoffs. So when people say they've been waiting for a housing crash, you have to realize what that actually means. And are you going to be that buyer who's in that good position, making that good income, having your debt to ratio in place to afford a 7, 8, or 9% interest rate on a house? So, what that basically means is it doesn't change your monthly mortgage. It just changed the price that you purchased it for. Now, I know that we have heard that, you marry the home and you date the rate. I don't like that because you need to go into it feeling like you can afford a house, not going into it thinking that you're going to revamp the interest rate for what you're happy for when it happens. Because I have no guarantees that that's even going to change or when it's going to change and what's going to happen. The good thing is now we're stuck in fixed rates. So it used to be a thing to get fluctuated rates where they match the market, and you couldn't change that. But fixed rates make it so you can, which is why a lot of sellers are saying, well, I'm staying put because I'm at a 2%, a 3%. Why would I move? Here's the thing. If you don't need to move, then don't move. But if you want to move and you want to upgrade or downgrade, you're getting married, you're having a divorce, you're needing to move for relocation for jobs, there's a ton of reasons why. Now people are working at home, they need more space. Like there's a lot of reasons why people need to move. And so I always get the question of when is the best time to buy? And it's when you can afford to buy what you want and what's going to work with your family. With that being said, I also have strategies on how to get investments underneath your belt. I own two investment properties that end up having a three income because I have one that's a dual. So here's the thing. I lived in those properties. I bought them as a personal home. There's a reason why I did that. It's less money. I could afford it. And I knew moving on that I was going to make an ROI, which is return on my investment. I have those two properties now that have three renters in them, and I'm making a cash flow of almost $2,000 a month on those properties. Now, I have strategies on how to move forward from one property to the next property as well, and I'd love to talk to you about that. But looking at this here, looking at back at home prices, bringing us back to what we talked about, the housing inventory is going to continue to go up because we still have a housing shortage crisis, which means the new build is still, we're going to have a high influx of new build coming in. They're still building. If the feds can see our inflation down and keeping it down, we're going to see a lot more incentives. Buyers giving incentives for free basements. I've seen this, a whole free new basement that's brand newly installed, upgrades, which are included, buying down your interest rate. There's going to be a lot more incentives for buyers to be able to want to jump into a market like that. But the housing inventory is going to go up, which is going to cause prices to come down because it is harder for buyers to buy in this kind of a market. We know that there's a ton of buyers out there because we had a ton of multiple offer situations just 9 months ago. It's just a matter if they can afford it or not. So looking at this, home prices are projected to go down to 10 to 25% less than what they did in spring of 2022. I just gave you a story where that's exactly what happened in my situation. The more the interest rates go up, the more the prices are going to have to come down. So the less equity you're going to have on your house, which is going to give you less of an opportunity to move. So I always say the sooner the better, especially if I can buy you an interest rate down. You want to make sure you can sell at the highest point that you can, which would be before the interest rates go up. Now, here's the other thing. We're turning into a rents economy here. A lot of renters are going to increase. We're going to have increased renters by 30%, and your rent value is going to also increase almost up to 7%. As someone who's a landlord, I've already seen that happen. Property taxes have increased, which means we are going to, as landlords, need to increase our rents in order to make it worth our value. Now, a lot of people think, oh my gosh, $2,000 extra a month, that is crazy. You are just money hogging things. If you're going to view things that way, then I definitely don't think that you are going to want to be an investor in real estate. But this is how people have done it to be able to move forward. I know there's a lot of theories out there that there's a lot of scams happening and people trying to buy a ton of marketing to make it difficult for people to buy. But that's why I say buy what you can and get your foot in the door. Lots of strategies to be able to how to do that. This is a capitalist country and this is what we do. I wouldn't call it a scam. I would call it people wanting to make cash flow. Just what's happening there. So we've talked about all the things: housing inventory, mortgage rates, housing prices, rental rates, market conditions. If you are seriously considering wanting to purchase or move next year, please reach out. I'd love to sit down and go over the numbers. I always say numbers can talk more than I can. So let's sit down and let your numbers make the decision for you. This is Jenny Pro Realtor, and we'll see you guys next time. Thanks so much and have a wonderful holiday and a happy new year.